there's all these signs of this tightness that really began in early December. And so maybe tariffs, and on a mainstream sense, people are like gobbling that up, and that's caused them to bid gold higher. But I think there's something more substantial going on behind the scenes that is leading to this rush to get...
You're watching Silver News Daily. Subscribe for more.
Silver demand is skyrocketing, supply is vanishing, and financial insiders are quietly preparing for what could be the biggest monetary shift in modern history. Craig Hemke has been sounding the alarm, warning that the silver market is reaching a critical breaking point. The question is, will investors realize what's happening before it's too late? For years, silver has been overshadowed, suppressed, and treated like just another commodity. But now, with industrial demand surging and global stockpiles running dangerously low, the market can't ignore the reality any longer. The silver deficit has been growing for 4 consecutive years, and experts warn that the situation is only getting worse. Meanwhile, gold has already shattered records, climbing past $3,000 an ounce. Historically, a signal that silver is about to follow with an even more violent move. So what does this all mean? Are we witnessing the beginning of silver's historic revaluation? Or is the market in for one final shakeout before the true monetary reset takes hold? The answers may be unfolding faster than anyone expected.
When we first noticed what appeared to be a tightness developing was back in December. About a month after Trump was elected. Initially, gold, just got shellacked for about 10% down from its highs, got pounded backwards a couple of times, and it kept recovering. But then after that December FOMC meeting, it's moved up almost in kind of a straight line, particularly since the first of the year. Back in the middle of December was the first time we saw the spreads widen from the spot price to the futures price, which at that point was the February contract in the March silver. And it got to like $30, $35. Now there should be some spread, but it should compress over time, for maybe $6, $8, $10 down to nothing. Well, when it was 35, it's like, what's going on here? And I remember the last time this happened, right before COVID. And there was, talk then about logistics and, planes weren't flying and all this kind of stuff. And again, the point of all this, there shouldn't be that wide of a spread. It should be easily closed by arbitrage. You got the spot price here and you got the futures price here. So if you buy the spot and you sell the futures, they come together. Well, why wasn't that being closed? It did close by the end of December. The point is then it widened again, it happened again in January. And now even here in February, it's, $30, $35 again. So why is that persisting? Why is that not being closed? To me, it's a lack of confidence, because if you're going to execute that trade, if you're going to buy at spot and sell the future, well, now you're short the future. Now you could deliver, you can get out of that from 2 ways. You can deliver your bought, that you got to take delivery of what you bought at spot and then deliver it. Well, now all of a sudden there's this alleged 6 to 8 week, whatever delivery delay. Maybe you won't get it delivered in time. And if you don't, now you're just short, the futures contract. Well, that's no good either. So it's a lack of confidence in the system that's being, the problem is. Now we've been told, and I was buying this for a while, it was all about tariffs, but I've not seen where
Silver's supply crisis is spiraling out of control. For the 5th consecutive year, the market is facing a massive deficit, with demand far exceeding available supply. And unlike past shortages, this one isn't temporary, it's structural, and it's getting worse. Mining output has barely increased despite record-high demand. In fact, silver production has remained stagnant for over a decade, struggling to grow beyond 1 billion ounces annually. Why? Because most silver isn't mined directly. It's extracted as a byproduct of other metals like copper, lead, and zinc. That means even if silver prices skyrocket, mining companies can't simply ramp up production overnight. Above-ground silver reserves are also dwindling fast. The industry has been relying on recycling to help fill the supply gap, but it's not enough. Meanwhile, major stockpiles at institutions like the Comex and LBMA are being drained at an alarming rate, with more metal being withdrawn than replaced. If this continues, we could soon reach a moment where there simply isn't enough silver to go around. This isn't just a supply crunch, it's a full-blown crisis. With industrial demand surging and investor interest growing, the imbalance is becoming unsustainable. And history tells us that when silver supply tightens this dramatically, explosive price moves are never far behind. But silver isn't moving in isolation. Gold has already shattered records, and that may be the clearest warning sign yet that silver's moment is near.
You begin the week that matters. It's how you end it, because you paint the weekly charts, and that kind of keeps the momentum going in either direction. We've had a lot of Mondays lately that have been down. So this is different, that we're going up. And we'll see. It's going to be an interesting week. There's that old Humphrey Hawkins Act from decades ago that demands that the chairman of the Federal Reserve come up to Capitol Hill every 6 months and sit before the Senate Finance Committee and the House Financial Services Committee and kind of give his biannual, semi-annual, I guess, State of the Union. And so we'll see that's tomorrow. That starts tomorrow. Most of the news is tomorrow because Powell will have his prepared remarks. They'll be released either right at 10 o'clock Eastern or shortly before. All the algos, will skim that for any hints of monetary policy changes. And then, whatever questions he gets asked will create headlines all through the day. So tomorrow's going to be volatile. Then we get the consumer price index. That's coming up on Wednesday. The producer price index on Thursday. So we're off to a great start. There are a lot of reasons to suspect that this next extension in the gold price will go up above $3,000. You recall last time we spoke, we talked about my macrocast. I thought that was definitely in play here in the first, 3 or 4 months of the year, and then we'd see, where we go from there. Sort of looks like that's where we're headed, though. I mean, again, I wouldn't say we're going to be there by next week, though we are $100 off the lows of last Sunday, the 2nd. So anything can happen.
Gold has broken past $3,000, and history tells us that silver won't be far behind. Every major gold rally has been followed by an even bigger percentage move in silver, and this time, the setup is stronger than ever. In 1980, gold surged to record highs, but silver outperformed, skyrocketing nearly 800% in just months. The same pattern repeated in 2011, when silver soared to almost $50 an ounce as gold hit new milestones. Today, with gold's latest breakout and silver still trading far below its historic highs, the gap between the two metals is glaring. The gold-to-silver ratio, a key metric used to measure silver's relative value, remains historically high, suggesting that silver is severely undervalued. And in past cycles, when this ratio corrects, silver doesn't just rise, it explodes. But this isn't just about historical trends. Gold's rise is a symptom of something much bigger: collapsing trust in fiat currencies. Central banks aren't buying gold as a speculative asset. They're hoarding it as a hedge against the financial system itself. And when confidence in paper money erodes, silver follows gold's lead. The real question is, how long before silver catches up? The answer may lie in the one factor that no one is prepared for: industrial demand. Because while gold is a monetary metal, silver is essential for modern technology, and its role in global industries is growing faster than ever before.
First, it's been 10 years. I went back and because I remember seeing this back in like late 2013, maybe it was January 2014. There was a guy named Ken Hoffman who was an analyst for Bloomberg, commodity analyst. And he's on Bloomberg television. This is 11 years ago. And they're asked, will gold bounce back this year? It's kind of that kind of general discussion. He goes, look, I think the bigger story is that the London vaults are empty. You used to go in there and you'd walk and there'd be, these racks of gold, and you'd move vault from one side to the other. The gold would just kind of go from one side to the other and it was no big deal. You walk in there now, there's no gold left. I mean, I made a pretty big deal of that at the time. That was 11 years ago. And that's mainstream media. That's not just some, tinfoil hat, lunatic blogger talking about that. Me, that's Bloomberg. And so you think, okay, well, if that was the case then, how much have they been able to replenish over the years ahead of then this record central bank demand we've seen the last 3 years. Now, can the vaults be empty in a literal sense? No. The LBMA came out just last Friday and said, oh, what's the worry? We got 8,500 tons. It's a lot, right? In a literal sense, there's all kinds of gold there. But those LBMA vaults are the Bank of England vaults that hold all of the Bank of England's gold, which is 4,000 some odd tons. They also hold all the ETF gold, like the GLD and the others, that is all custodian in London, which is pretty handy, actually. But that's like 3,000 tons. So the maximum that could conceivably be for, I mean, I guess you could say the Bank of England could sell gold just like they did at Brown's Bottom, in 1999. But you can't, I mean, it would be pretty nefarious to be taking the GLD gold and selling it to market. So what's the actual float? I remember Ronan Manley writing about this a couple years ago, 800 tons. Well, now that's a number that, kind of hand to mouth, just in time delivery number that could be in peril here. And again, if there's all this gold, why does it take 4 to 8 weeks to deliver it? They had to, Dave, whatever the hell Dave's last name is, Bank of England, assistant vice governor or whatever his title was, Dave Ramsden, I think was his name. Anyway, just like the Fed has press conferences after their FOMC meetings, well, Andrew Bailey, the head of the Bank of England, now does this as well. And they cut rates last week. So they're having a press conference. About halfway in, a young reporter stands up and says, hey, what's this going on with gold? And this Ramsden takes the question and just gives this stuttering, stammering, 4-minute rambling remark, word salad, kind of Kamala Harris style. That just like took up a bunch of time. You look, it's been 4 minutes. Like, well, I guess he said something. And what he said was, well, we can only move so much at a time, and gold is heavy and all this kind of stuff. What? I mean, if you had the gold to deliver, if somebody was willing to sell it and deliver it, or even lease it and deliver it, you wouldn't have to wait in line 4 to 8 weeks. And again, that's not me saying that. That was a report in the veritable old Financial Times 2 weeks ago. So there's definitely something going on here, Elijah. And you can see it in the price that has moved up really consistently, almost 45-degree up angle since the first of the year.
Silver isn't just a monetary metal. It's a critical industrial resource, and demand is accelerating at a pace the market simply can't sustain. Unlike gold, which is primarily hoarded, silver is constantly being consumed in industries that can't function without it. And right now, those industries are expanding faster than ever. The solar industry alone is devouring record amounts of silver. In 2024, photovoltaic PV technology accounted for more than 20% of total silver demand, and that number is still climbing. Governments worldwide are pushing aggressive green energy policies, and solar panel production is expected to skyrocket in the coming years, meaning even more silver will be needed. Then there's the electric vehicle, EV revolution. Each EV requires significantly more silver than traditional gas-powered cars, and as the global auto industry shifts toward electrification, silver consumption is surging. Add in the rise of AI-driven technologies, 5G infrastructure, and medical applications, and it's clear. Silver isn't just another commodity. It's a foundation of the modern world. But here's the problem. Industrial users are competing for the same silver that investors are now waking up to. As supply shrinks and demand rises, a tipping point is inevitable. Manufacturers may soon be forced to bid against financial institutions and retail buyers just to secure the silver they need. And if that happens, silver prices could go vertical in a way the market has never seen before. But the real warning sign isn't just demand, it's where the silver is coming from. Because right now, the vaults that hold the world's silver reserves are being drained at a shocking rate. And when they run out, the entire market could be thrown into chaos.
Gold or silver are even in discussion. I mean, we got aluminum and steel, and stuff, and general tariffs that are discussed against the EU and Canada, Mexico, and the like. But I'm not seeing anything specific for gold. And I started thinking a couple of weeks ago, I was in the middle of a podcast I recorded for my site with Andrew McGuire. I was like, Andy, I think we're being gaslit. I think we're being told that it's a tariff as cover. And what got me thinking about that is, Elijah, World Gold Council just last week announced another, 1,045 metric tons or something of net central bank demand in 2024. Third year in a row, over 1,000 metric tons of net demand. It's like 3,300 metric tons. That, most of that, I think, is being taken and moved from west to east. We know about the silver supply deficit that's now 700 million ounces at least over the last couple of years. And it just made me wonder, London operates on a pretty tight float. I wonder if maybe they're just running out of metal. And I think that's a possibility. Then lastly, I'll just add one more thing. Again, this all began after Trump. It really started kicking in December after that first pullback. Maybe, and we got some hints of this over the weekend, maybe there's some kind of, we'll loosely call it monetization of gold that's coming by the Trump administration, whether it's gold-backed bonds or whatever, that is demanding, that is, forcing U.S. government, Fed agents, bullion banks, which are the primary dealers of the Treasury market, maybe they're the one. That's why this metal's coming back to the U.S. And they're using this tariff story, as cover, so as not to give the game away or cause a panic. Again, these are all things that are on my mind. I can't prove any of that stuff, but this is all the stuff you got to think about.
Silver vaults are running dry, and the implications for the market are massive. The Comex and LBMA, two of the largest silver trading hubs in the world, are seeing their inventories vanish at an alarming rate. For years, these institutions have operated under the assumption that silver would always be available to meet demand. But now, that assumption is crumbling. Comex-registered silver stocks have been draining for months, with withdrawals far outpacing new deposits. Meanwhile, the LBMA's silver inventories have fallen to dangerously low levels, raising concerns that physical silver may not be available for delivery when contracts come due. The industry is facing a harsh reality. There is far more paper silver being traded than actual physical silver in these vaults. And that's where the real danger lies. The entire silver market has been built on a system of derivatives, futures contracts, and paper promises. But when physical silver is no longer available to back those contracts, the paper market could collapse, triggering a price surge unlike anything we've ever seen. The warning signs are everywhere. Whispers of delivery delays, increasing premiums on physical silver, and a growing number of investors demanding real metal instead of paper claims. If confidence in the paper-silver market collapses, we could see a historic short squeeze, forcing prices to rise rapidly as traders scramble to cover their positions. But silver's supply crisis isn't happening in a vacuum. There's another force reshaping global finance, the de-dollarization movement. As nations move away from the US dollar and shift their reserves into hard assets, silver's role in the financial system may be about to change forever.
What kind of impact that would be. Maybe it's when they talk about monetization, and the other part of his quote was like the way other countries have done or it's accepted in the Western world. Maybe that gets the Judy Shelton thing. They're going to take some gold and somehow back longer term, very long term securities, some treasury bonds with it at maybe a lower interest rate, and they can cut into the interest cost of the U.S. government, that kind of, maybe that's exactly the direction they're going to go because, they talk about doing it in traditional sense. But either way, again, what I was getting at earlier, this situation started to reveal itself back in early December, and it went away at the end of the year. Some future selling dropped the price, dropped that spread down, and then widened back out. Got as high as $43 or something a week or two ago, and then dropped back down when the February contract went off. And then it expanded out, I think currently it's about $30 again. We've seen the lease rates in London go surging higher. Well, why is that? Well, if I'm going to loan you my metal and I'm not sure you're going to give it back to me, Elijah, I'm not going to give it to you at 1%. That sort of thing. We've seen the cost to borrow shares in the GLD skyrocket. Well, why is that? Well, if the only entities that can take metal out of the GLD are the authorized participants. That's what they call them. What are the authorized participants? The bullion banks, the ones responsible for flowing metal physical metal at the digital derivative price. Well, if they don't have enough on hand, what do? They're going to borrow some shares, cobble them together into a basket and redeem them for metal. Well, if there's not that many shares out there, or if you're going to think about loaning your shares, maybe you want a higher interest rate because, again, how's that going to affect your bottom line? So there's all these signs of this tightness that really began in early December. And so maybe tariffs, and on a mainstream sense, people are like gobbling that up, and that's caused them to bid gold higher. But I think there's more likely we're being gaslit with that story, that there's something more substantial going on behind the scenes that is leading to this rush to get metal back into the U.S.
The global financial system is shifting, and silver may be on the verge of reclaiming its historic monetary role. De-dollarization is accelerating as countries like China, Russia, and even emerging economies move away from the US dollar, seeking refuge in hard assets. Central banks have been aggressively stockpiling gold, signaling a loss of confidence in fiat currencies. But here's what most people are missing. Silver has always followed gold during times of monetary upheaval, and history suggests its return to the financial system may be inevitable. For decades, the US dollar has dominated international trade, but that dominance is fading. The weaponization of the dollar, through sanctions, trade restrictions, and monetary manipulation, has forced nations to rethink their reliance on it. As a result, central banks are diversifying into tangible stores of value, with gold purchases hitting record highs. While silver isn't officially part of central bank reserves, its deep monetary history suggests it could soon play a much bigger role. Look to the east, and the signs are everywhere. China and India already treat silver as money, with massive demand for silver coins, bars, and jewelry. In the West, silver's monetary role has faded, but as confidence in fiat currencies crumbles, that could change rapidly. If nations continue moving toward asset-backed reserves, silver could once again be recognized as a key financial instrument. And here's where things get interesting. Some governments are quietly making moves towards silver-backed financial products. Russia has openly discussed expanding its precious metal holdings to include silver, and there are growing whispers that future monetary policies could incorporate both gold and silver as real stores of value. The pieces are falling into place. As fiat money weakens and gold reclaims its position as a global reserve asset, silver is poised to follow. But this isn't just speculation. History shows that when financial systems break down, silver always finds its way back into the monetary system. The question now is, will silver's return to real money be a slow transition, or will a sudden financial crisis force the world back to silver overnight? The answer could reshape the global economy forever.
I want to back up first, though, to what you said about, the silver squeeze and the like. That was a similar kind of event, okay, where everybody was trying to suck up all the available silver. Remember, there was this panic of alleged truckloads of silver being moved around in London and all that kind of stuff. It's a similar deal on a smaller scale in a much smaller market. Okay, so they're not identical, but kind of the same thing. We're just now doing this in the global gold market, is the biggest market cap, if you will, in the world. And so this is, an ounce of gold here that you can pick up at $49 over spot because it used to be $100 over spot. It was two different things. Yeah, that's the only point I was trying to make. Back to the new Secretary of the Treasury, who has been rumored, or people have seen his writings about, looking favorably upon gold. I would further point out, you might remember, in fact, I don't know, maybe you've even had the pleasure of interviewing her. Judy Shelton was nominated by Trump to be a Fed Board of Governors back in 18 during his first term. And she was too extreme. She was a diversity hire. But no. She's too extreme because she's talked about the gold standard before and ways to relink the currency to some sound backing. Well, maybe she's got his ear. Maybe this Besson guy's got his ear, and they're thinking about where we're going to go from here. I'm not sure when the little Oval Office snippet that a lot of people have seen or maybe you can include it somewhere. Chris Marcus had a thing on Twitter yesterday, and it was Trump is sitting there signing executive orders, and he says, "Hey, Scott, we're talking about, getting to some of the assets on the balance sheet, and get them to work for us." And Besson goes on and says, "Well, yes, we were talking about monetizing some of our assets, and things that we can do on the balance sheet to make our fiscal situation look better." And everybody goes, "Oh, wow, I don't know. Yeah, could he be talking about a new valuation of what's stated to be the U.S.'s holdings of 8,133 metric tons? It's all carried on the books at $42 an ounce." Well, maybe they go and they say, "Well, actually, no, I saw this morning it's $2,900 an ounce." I don't even know.
For thousands of years, silver was money. It wasn't just a commodity, it was the foundation of trade, used in everything from Roman coins to the US dollar itself. But over time, governments abandoned silver-backed currencies in favor of fiat money, paper backed by nothing but trust. Now, as confidence in fiat crumbles, silver's historic role as real money is being reconsidered. We've seen this before. When economic systems fail, nations return to hard assets. The classical gold and silver standards backed currencies for centuries, providing financial stability in times of crisis. But in 1971, when the U.S. cut ties between the dollar and gold, silver lost its official monetary status as well. What followed? Decades of inflation, debt expansion, and the gradual erosion of purchasing power. Today, that system is reaching its breaking point. The signs of silver's return as money are everywhere. Global distrust in fiat is rising. Governments are hoarding gold, and some, like Russia, have openly discussed adding silver to their reserves. Retail demand for silver coins and bars is surging, and in some parts of the world, particularly China and India, silver is still treated as a store of value. Even digital currencies are experimenting with silver-backed tokens, hinting at a possible fusion of old and new monetary systems. If the global economy faces a true reset, silver could once again become an integral part of financial transactions. Whether through official backing, private markets, or digital silver-linked assets, its return as real money is no longer a question of if, but when. The final question remains, will this transition be a gradual shift, or will a sudden economic shock force the world back to silver overnight? The answer may be coming sooner than we think. The financial reset is no longer just a theory, it's happening now. Silver demand is surging, supply is vanishing, and faith in fiat money is collapsing. Every signal we've discussed, the supply crisis, the industrial boom, the depletion of vaults, gold's breakout, and global de-dollarization, is pointing to one thing. The world is preparing for a massive shift in the monetary system. And silver? It could be at the center of it all. The question isn't whether silver will rise, it's how fast and how high. The cracks in the paper silver market are widening, and if physical silver shortages reach a tipping point, we could see a revaluation unlike anything in modern history. But before that happens, we may experience one final moment of extreme volatility. Manipulation, sell-offs, and desperate attempts to keep silver suppressed before the inevitable breakout. This isn't just another silver rally. It's the moment that could redefine the role of silver in global finance. The fiat system is failing, and history has shown that when trust in paper money evaporates, real assets take their place. Silver's time is coming. The only question is, will you be ahead of the curve when the reset finally hits? If you found this discussion valuable, stay informed, stay prepared, and remember, this is not financial advice. Do your research, understand the risks, and recognize the magnitude of what's unfolding. Because when the dust settles, silver may no longer be just another commodity. It could once again be the backbone of global money.